In today's video, we're going to be talking about whether this Bitcoin price action, this current pullback, is the correction that we've been talking about for a few weeks. We'll be talking about that in the context of 2021. We'll be talking about that in the context of 2016 and 2017 corrective periods as well as 2013, while also talking about some of the predictions based on these charts that we shared in late November and then, of course, even later November. So we'll be talking about all those charts and what could we expect going forward for Bitcoin's price action. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. But first, a quick message from our sponsor. Our sponsor for today's video is bitfinex, and they are a really great crypto exchange for you to consider for your daily crypto trading and investing. They are a no KYC, no VPN futures exchange, and their liquidity is on par with the top exchanges. Users can trade over 250 trading pairs with up to 125x leverage without restriction. And to celebrate our partnership, we're running a very special offer. From December 17th until December 31st, you can sign up using my link and deposit $200 to get $100 back and win up to 6 Solana when you trade on bitfinex. Deposit rewards will be distributed on the very next working day, and the Solana will be distributed after the campaign ends. And for more information, check out the link in the description down below. Thank you so much, bitfinex, for sponsoring this episode. Let's dive right into it because there is lots going on in the market. Technically, we are in a parabolic upside phase of the cycle, and that's understandable. We tend to see upside, but not without pullbacks in the meantime. Every first price discovery uptrend tends to have pullbacks, and in 2021, when we look at week 6, we got a 16% pullback. When we look at week 8, we got an 8% dip. And if we look even at 2016 and 2017, then we got a 34% pullback in week 8. And so really important to understand that week 6, week 7, week 8 tend to be quite problematic for Bitcoin, because in week 7 of 2013, we saw a 75% pullback in 13 weeks. And I'm not saying we're going to see a 75% pullback in this cycle, but it just showcases to us that week 7 tends to be problematic from 2013. Week 8 tends to be problematic from 2017 when it comes to a 34% pullback, and week 8 and week 6 tend to be problematic from 2021. We've passed week 6 rather successfully, but still week 8 showcases that we tend to see pulling back in price action for Bitcoin, and we experience corrective moves in price discovery. So when we look at this tweet, it makes all the more sense because it's week 7 that's problematic. It's week 8, and it can be also problematic to be in week 6 as well. But the fact that we're currently in week 7, because this was a tweet from late November, we're in week 7, and the fact that we're seeing a pullback right now, it's no surprise, necessarily speaking. And in fact, I've been talking about how my strategy has been since late November here, whereby weeks 1 to 3 were optimistic and risk on. Obviously, seeing upside is going to be profitable, and so building positions and enjoying that uptrending is going to be great. But weeks 4 to 5, cautiously optimistic and still risk aware. However, as we get to the weeks 6 to 8, where I'm concerned and completely risk off when it comes to new positions, swing trading positions, any new positions for Bitcoin and altcoins, I'm completely risk off and not building any new ones. My long-term positions are fine and still there regardless, but I was very concerned and risk off as we approach week 6 to week 7 and 8, and we're currently seeing a pullback of 10%. And before we talk about this chart, I just want to talk to you about how we've been rallying and essentially reclaiming weekly levels every single time. So weekly levels were a resistance, then a support, and then the same thing here. They were a resistance and then a support, and then over here they were a resistance and then a support. And what we're seeing here for the first time is not only a bearish engulfing candle, but we're losing resistances that turned into support. We're losing them as support, and maybe we're going to be turning them into resistance in the future. Maybe we don't even need to turn them into resistance. We just need to lose them as support. And it's losing key areas of support and key levels as support that's going to transition us into a corrective period, because technically this is still just a 10% dip. We're in this area of historical support that has enabled the move to 110, roughly speaking. But now that we're back here, if this is lost, then we could have another signal that we might be transitioning into the corrective period. So the first signal, first warning sign, are of course the historical tendencies that I've been talking about, that we just covered in this video. But the next warning signs are of course the bearish engulfing candle, the fact that we're losing weekly levels as support, and in fact this weekly resistance wasn't turned into support like we saw so many times in this uptrend. Weekly resistance, support, weekly resistance, support, weekly resistance, and then support. We're not getting that anymore, and we're actually losing weekly levels. And so if this blue region also gets lost as a support, and then we actually lose this 5-week technical uptrend in this orange trend line, if all of these things are lost, then this is going to be mounting and mounting and mounting evidence that we might be transitioning from what is technically still a 10% dip. We might be transitioning into a pullback moment, and in fact a corrective period. So it's really important to understand what those corrective periods have looked like in the past, and 34% has been something of a recurring theme in 2016. 34% in week 8. We had 34% when it came to confirming the first price discovery uptrend in the very beginning of that uptrend. We got 40%, 38%, 29% in 2016, 2017. So we've seen pullbacks take place which were quite deep in price discovery in the past. But let's talk about the more recent past. Let's talk about this year and how we've seen from the March high to the August low here, that in total is a 34% pullback. So talking about 2016 and 2017, saying to me that, well, we're not going to really see 30% pullbacks, we've just seen a 34% pullback from March to August. And not only that, we've seen a 24% pullback right over here in between. So an overall corrective period of 34% saw a few more corrective periods within, 24% right over here, and here as well, 26% right over here. And then lastly, we got from here to this low, that's 30%. So we've seen quite a few pullbacks of 25% to 30% in this cycle as well. So saying that they won't occur in this cycle is ignoring not only the distant past of 2017, but also ignoring the more recent past of 2024, and a drop from this local top towards the filling of the CME gap. So there is a CME gap here that's been left unfilled between 78k to 80k. If we see history repeat, the most recent history repeat with only a 25% pullback, we'd tap the very top of that CME gap. So delving into 26%, 27%, 28%, that would fill the entire CME gap. And I'm not even talking about this CME gap which filled, because this was always going to get filled whether via a small downside wick in a dip or in a pullback just like this. But it's larger, significant CME gaps that tend to be ones to really watch when we see major trend shifts. We can't talk about this CME gap until we've seen a confirmation in the corrective period. And like I mentioned, we haven't yet lost this technical uptrend. We haven't yet lost this historical demand area. We are, of course, rejecting and losing weekly levels, but the week is still young. We need to see that confirmation come in first. But we are seeing a bearish engulfing candle. We are seeing history repeat itself with a week 7 corrective period. And there is a lot of signs conspiring with the fact that maybe this is going to be the beginning of a more deeper correction in Bitcoin's price action. But when it comes to first price discovery corrections, we tend to see plain sailing for the most part in the first 6 weeks or so. 2013 showcasing that quite nicely, but then we'd have to have a price discovery correction just to give us a breather for the market to cool down, for it to be a healthy pullback so that we can position ourselves on discounts and bargain prices, but also enable the next leg up as we see afterwards the price discovery continues. We still have pullbacks on the way to new all-time highs, but inevitably these pullbacks are what enable the future pullbacks, or at least the future uptrends in the parabolic phase of the cycle, the remainder of that cycle. So this pullback in 2017, it enabled a fantastic movement of upside. Of course, another price discovery correction would occur in the future in 2016, but yet again, another uptrend, another price discovery correction still, and then another uptrend, another pullback, and another uptrend. So really important to understand that price discovery corrections are part and parcel of any price discovery uptrend. In 2021, we initially saw some really shallow pullbacks, but still 16%. That was week 6, 8% week 8. But we've seen fantastic upside in the meantime. And these are all charts from the Hall of Fame Pro, by the way, in case you're seeing them for the first time. These are charts that I've been showing for a long time in Hall of Fame Pro, preparing us for these moves and navigating them. So if you want to sign up to the newsletter, feel free to do so, because it's really worth it being prepared like this. And this is a correction that we saw in 2021 as well. And so it's a correction that we'll see occur in the future. This was quite a correction, 31%, which is historically accurate across cycles, 2017 and 2024 included as well. But that enables the next uptrend, and that uptrend enables the next correction. But the way that these corrections enable the next uptrends enable the next corrections, and so on until we finally transition into the bear market. So I talk about that in other videos, but in any case, that's about it for today's video. Thanks so much for tuning in. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. Of course, subscribe to the channel, and of course, sign up to the Rekt Capital newsletter in the link in the description down below. But that's about it for today's video. Thanks so much for joining me. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.